Welcome to Digital Asset News. Take a top stories in crypto and bring them out of bite-sized pieces. So today, just as the thumbnail suggests, we're going to take a look at just what is going on with the market. And not just our market, because our market, we're not in a bubble. We cannot live in this small ecosphere. It really expands out. And we're going to take a look at what's going on with the traditional markets, and that is happening. So we'll take a look. First, we'll take a look at what's going on with the market, ourselves. We'll take a look at the traditional market, and is it correlated what's going on? Then we're going to take a look at what I call the good news. And next to last, we'll take a look as far as like looking forward, businesses and payments, and what it all means. Then lastly, we'll just go over quick questions, your top 5 questions answered, and you can leave those in the comments section at the right. So first of all, welcome everybody. Welcome to the show. Doing another live stream quickly just to get things out the way. Before we move on, let's make sure audio and video is good. I have had problems in the past. Just want to make sure that you can hear me, you can see me, it's not too glitchy, all that good stuff. And I look like Matthew McConaughey. I will take that today. I think today is not a great day for me. Someone says, even George is bearish. That question no one has the answer to. Yeah, I don't have all the answers. I just have a little bit of data, and we'll take a look at that. Okay, audio and video are good. Let's get going, shall we? So first up, let's take a look. Let me get this out of the way. All good audio. Let's take a look at the market itself. And right now, weren't we just at 2.2 trillion? Well, now here we are down below 2 trillion. Depends on which different place you look at. You can look at coin market cap, and that'll tell you like one market cap around 2.1. You can take a look at CoinGecko. That'll take you to around 2.48, 2.5. You can take a look at Trade the Chain, which is sentiment analysis, link in the description, and it'll tell you it's below 2. But it's somewhere around there. And let's just be honest, we've all seen a slippage of what's going on. So we're roughly around 2 trillion. Looks like we're down a bit below. The big thing is, there's 2 big things. The sentiment, what is the sentiment out there? What are people thinking is going to happen? We're still neutral. We don't know which way we're going. I'm going to tell you where I think we're going in a bit. But let's take a look at just hard data, which is, what's the price? That's always interesting. So if we take a look at Bitcoin, right now, over the last 24 hours, we've seen a slippage of 2%. Ethereum is even more so, 3.6. Tether's Tether. It's a stable coin. Binance Coin down 2. Cardano down 2. Although Cardano had a pretty massive run. Solana down 3, almost 4. XRP 2%. Everything's down. Is anything up? Let's just go with that. In the last 24 hours, anything up? Hey, Ethereum Classic. Great. Congratulations, Ethereum Classic holders. All 2 of you. I'm just kidding. I'm sure a lot of Ethereum Classic holders. Theta's up 3%. Probably Metaverse play. Aave up 3. Stacks up 8%. Good for Stacks. DeFi play for Bitcoin. But the one thing you'll notice here is in the last hour, people are still a little bit bullish, and they're buying into it. So that's what we have right here. But if we take a look at what's going on in the traditional space, this is what I always look at pretty much every day over a trading view. Take a look at the market summary. We can see that the traditional space itself is down just a touch. And we can see that, yes, the S&P, the NASDAQ, the Dow, everything is just down across the board. And the question then is, well, let's just really jump into it and just see exactly how far down it's going. And it's not a big thing. Remember, if you have never played in the traditional finance space or stocks, 1% is a pretty big day. 2% is hellacious, and 5% is just unthinkable, depending on like S&P 500s. Let me turn this down. So today we're down 1.61%. We started off pretty high, 46.32. But again, unfortunately, in the traditional space, people really hyper focus in on the day. And it doesn't matter what you're investing into. You really should have that mindset of, when in doubt, zoom out. So let's just back up for a second. Take a look at the 5-day. That's not bad. Actually, no, I take that back. It's kind of bad. We've seen it like go up, kind of push up here, and then go down. What about a month? Same thing here. How about 6 months? Not too bad. How about a year? Pretty good. So again, even the traditional space, people will flip out because they just have this mindset to hyper focus in on the last day, the last hour, the last 2 hours, or whatever else it is. But yeah, we can see that there is a decline. So why? What's going on? Well, We can also take a look at the numbers here for Bitcoin. And I am not a TA guy. Just going to tell you guys straight. I don't. But the little things that I do know, I can see if we take a look at the 4 hour, you can see a nice little decline here happening over the last 4, 8, 16, 20, 24, so on and so forth. And now we're down to around 41. And look at these little wicks right here. These red candles, I'm going to take a look at the RSI, Relative Strength Index. We're going in pretty oversold territory, which is, I mean, it's crypto. It is what it is. But you can take a look here. The MACD is flipped. And all you got to know here is when the MACD flips and we see a little bit more red underneath here, you're going to see a little bit more selling. So does this mean there's going to be a lot more selling? Nobody knows. It's crypto. TA works until it doesn't. So the big question then is, what's going on? Why is this happening? Well, it could be just basically summed up like this. The stock market, everybody is skittish because of the earnings reports that are coming out, and also because of the interest rates that we keep hearing about being raised. And it's so much so that we've got a lot of people on the traditional finance space, traditional markets going, man, I can't deal with that. So here's what we got today. So today it is January 18th, Tuesday. U.S. stocks fell sharply Tuesday morning. Quarterly earnings reports from companies across all three major indexes. The Dow Jones Industrial Average plunged more than 500 points. Sky is falling. And the tech-heavy NASDAQ shed 1.7 as Wall Street continued to weigh the likelihood of sooner than expected interest rate hikes. So if you're unfamiliar with it, the Fed comes in and says, look, we've been printing all this money, and that's sweet and nice for everybody, but at some point we have to rein that in, and we want that money back. So we're going to start to increase the rates, and we're not going to essentially buy a bunch of these different properties or the different things to kind of bail out the stock market. So what we're going to do, let's raise a little bit. Not going to be too much, maybe like 3/4 of a point, and maybe just one, but probably a couple, maybe 4. And if you listen to Jamie Dimon, maybe it's going to be like 8. Who knows? But in the traditional space, people are like, that is way too much. It's going to cause us just to crater. Debatable. But again, we will see. So moving on, Goldman Sachs, as far as earnings go. Oh, excuse me. Let me go back up here. The yield on the benchmark 10-year Treasury rose to its highest level in 2 years, up to 1.84%. Wow, watch out. That's just a little hedge for all the different problems that are happening in the markets itself. You get into Treasury notes, and you can offset some of those risks if you're into those. I don't really think it's a big deal for 1.84% per year, but that's just me. But here's the problem. Earnings report. Goldman Sachs, PNC Bank, and Bank of New York Mellon, one of the oldest banks here in the U.S. I don't know if it's globally, but definitely U.S., released earnings report for the last 3 months of 2021 before market opens. Goldman Sachs reported fourth quarter earnings that fell below the analyst expectations, reflecting a decline in profit for the last 3 months of the year due to weakness in its trading arm. Well, that's a bummer. Sorry. And before I go on, I just have to ask the question and what everybody else thinks here. Because when I take a look at this and I see how the S&P drops, the Dow drops, and the traditional market just pretty much drops because of these earnings report. Then I take a look at the crypto market, and we have seen 2-3% as well. We see Bitcoin going down, Ethereum going down. And people say, no, it's not correlated. I happen to believe that it actually is just a little bit, because we love when the traditional space comes in, the hedge funds and everybody else comes in with their money and they buy up all the crypto, but we hate it when they sell. And again, like I've always said before, we're one of the few places that's open 24/7, 365, unless you're Forex, I guess. So if they're going to take some losses, where are they going to take it out of? Well, probably in a market they don't usually really believe in, and that's us. So I'm not saying that's what I believe. I'm just saying that's pretty much how it goes, because I kind of feel like the traditional space kind of treats this place as like a piggy bank for some reason, even though if they were smart, they would hold on for the long haul, because I think I know where things, I believe, or I feel that I believe where things are going. I don't know for sure. This is just investment opinion, not investment advice. All right. So jumping back, there is some good news for the traditional markets, those guys. The outlook for 2022 remains positive among strategists who anticipate that although the year is unlikely to match the blockbuster returns of 2021, stocks are in good shape for solid returns. And investors will also tune into fresh data out of Washington due out today. including fresh reads in the New York Federal Reserve's Empire Manufacturing Index and the National Home Builder Association's Housing Market Index. And I can just tell you right now, housing market is still pretty darn strong. We actually just sold a couple of properties ourselves because I'll be honest with you, the prices are just ridiculously high. So why wouldn't we sell? Actually, I was talking to a friend of mine, Paul Barone, over the Paul Barone Network, and he was saying that millionaires in Florida were selling their properties because the prices were so ridiculously high, and they were moving into Airbnbs for, he said, probably a year and a half, or maybe longer, because they're just going to ride it out. And then once everything kind of readjusts and markets fall, which they always do, and they'll buy back in. That's how smart money does it. So that's what we have as far as the traditional market. So we can kind of see how things are going. There's a problem with earnings reports. People didn't make as much. A traditional finance place freaks out, and they call us the crazy ones. They can't even deal with 1-2%. Let me just think about that in the comment section. Let's take a look at some good news. So traditional finances, they have their problems. But I tend to take a look at what's going on behind the scenes and where things were, because you can't know where you're going until you know where you've been. And if we take a look, I love this. There is this Twitter account I follow, Blockworks. They always got some great data. And here's one of them. And it talks about purchasing power of the dollar, or $100 to be specific. So when you see all these different hedge funds and institutions and they're selling out and they're holding on to dollars, I don't understand why they're doing that. I see it's incredibly short-sighted, because if they're selling everything and holding on to dollars and hoarding onto it, what are you doing? What are you doing, guy? All you're doing is dealing with the inflation of 7%. And if it's not getting at 7%, you can put it into those bonds. Well, good luck with that 1.83%. But here's the problem. The dollar is slipping. It's been slipping. The purchasing power has gone down over time. 1950, it was worth $100. 1990, $18, and 2021, $8.70, which is why when your grandparents said they could buy bread and a house for a nickel, it's an exaggeration, but you know what I mean. The purchasing power has gone down so much. It's just kind of astounds me why people just say, like even people in my own family, they're like, no, I'm just going to write it out in cash. Sounds like a great plan. Have fun with inflation. And then if we also take a look at just some on-chain analysis. This was a good one from Glassnode. And it talks about whales are holding Bitcoin more than ever. Let me blow this up so you can see a little bit more. So this is over time, over the last 2015, 16, and 2022. And we take a look at exchanges or supplies. That's in that brownish looking graph. You can see that it kind of peaked right before 2020. There's a lot of different Bitcoin that was being held in the exchanges, and then people slowly started to take it off and put it into cold storage or whatever they were doing with it. And then, of course, you've got whales or holders that have more than 1,000 Bitcoin. Hint, I am not one of those people. Maybe someday. I'll probably never get there. But you can see how they've actually increased over time precipitously since 2018. It's amazing, actually. In 2016, 2017, there was a huge accumulation. Then they dumped it all in 2017 because it was super overvaluated. And then they let it drop some more, and they just started from 2018 to now just accumulating. Because when they talk about smart money, well, there's the example. There's a great example of smart money and what people are doing. Again, I don't see why you wouldn't put a little bit into crypto if the purchasing power of the dollar is going down. And then also, don't forget about the people who are getting into crypto. Speaking of the S&P 500, this is Bill Miller. We've already talked about this. He is one of the Wall Street legends, and he was one of the few people that could beat the basic buy and hold of getting into the S&P 500. And he did it for 15 years straight. And that's a guy who knows a lot about stocks. And you know what he just said a couple of weeks ago? Actually, 1 week, January 10th. He said he put 50% of his personal wealth into Bitcoin. And then the other part was like Amazon and something else. But 50% into Bitcoin. So if we just take a step back and go, what the hell is going on with everything that's going on in the market? Are we in the right place? Are we doing the right things? Because, it's crypto. I can't tell you what to do. Again, investment opinion, not investment advice. But if we take a look at the big picture, I think people, when they do things, they tend to look at things that have worked in the past, which, because we're all victims of our own past repetitions, they say, well, it worked in the past to just sell and get into cash and stick it in the savings account, like my parents and grandparents told me. Also, to work at a job for 40 years and just live off the pension. It doesn't happen. Well, it does in some places, but in this case, it's the same thing that they think is going to happen. It's going to work out. I don't think it's going to work out too well. Anyhow, let me know what you think about that. And then lastly, I just want to show you, like, just to really drive this home as far as like what this looks like, just looking forward as far as business and payments. And this actually came to us through the Daily Upside. Daily Upside, it's a free newsletter I get every single day. There's a link in the description. It's free. And it just kind of keeps us up to date with what's going on in like the macro financial environment in our whole world. And one of the stories that came out, it talks about Apple, Amazon, and Ford contend with payment models. And why is payment models and payments, transactions online, such a big deal? It's such a big deal because they make a lot of money and they lose a lot of money by doing these transactions. So here's what it states. It's really good. I do like this one. It says Apple, if you don't know, takes for people like me and you, if we did an app or put an app in there, they take 30% of all the transactions that are done if you have it on the Apple platform. So if you create, let me drive this home. Let me really drive this home. If you create an app and you want Apple users to download it and use it, if there's any way, shape, or form to where you want them to pay for your service, Apple immediately takes a third of it, 30%. I've done this myself, and I never used Apple again. So if you think about payments, just think about how much crypto digital assets could actually solve this problem. So Apple takes 30% for purchases, but the Netherlands came up against them and said, look, you can't do that. Netherlands Antitrust Authority ruled blocking alternatives in app payment methods, notably in dating apps like Tinder, breached competition rules or antitrust laws, I guess you could say. Apple said, okay, they're going to cave. They said, okay, if you want to do that, they said that if apps choose to use third-party payments outside of Apple Pay, it won't be able to help them with user refunds, subscription management, or payment issues, which is, I think, reasonable. And they'll need to create a separate app for only the Netherlands. So like, okay, if you want to do that, we'll do it just for you guys until someone else sues us. And Apple says it will still put some kind of surcharge on the third-party transactions. Why are they being such whatever to do these things? Why are they being so hard-headed? It's because Apple made $85 billion or 22% of all revenues off the App Store in 2021. So if you think about what could be a huge disruptor, it's payments for businesses, not just small businesses like mine, medium-sized businesses, large-sized businesses. And this is why Amazon did the same thing. Amazon on Monday backed off threats to ban Visa payments in the UK. They actually shut off Visa payments in the UK. I actually verified this with UK residents. They originally citing high transaction fees resulting from Brexit. The commerce giant said it's working with Visa on a truce. We'll see if it works out. And here's what happens if I think Ford might be a big loser here because Ford signed a 5-year deal with Stripe. Stripe is an online transaction payment processor. I use it myself. It's 2.99% plus 30 cents for each transaction, or 1.99%, and depending on what they get. They signed a 5-year deal with Stripe to use its technology to process e-commerce payments in North America and Europe. I think that's going to bite them because they're going to be there with 5 years. If crypto payments and digital asset payments come out and you can name your favorite crypto, and the payments are actually low, then I think that could be the next big thing. So again, why don't you think about that? And that's it for today. Now we're just going to go over and just do a quick 5 questions. Send me your questions right now in the chat, and I'll answer those. And then we'll try to get out of here under 20 minutes. That's my goal every day. Get out of here under 20 minutes. We're at 19. Oof, I'm not going to make it. 19:30. Okay. What do we got? Let me turn this off. We don't need this. Crypto should not be correlated to the stock market. Yes, that's true. However, it kind of looks like it is. And depending on who you ask and who you talk to, I still see it as a little bit correlated because, everybody wanted traditional finance to come here. Well, now it's here. So what are you going to do? Let's see. Can you prove this message? Prove it's live. Alex is live. Come on, it's goofy. So that's one. You excited for D's delivery? Yes. So Crypto Cookie, shout out to Cookie over there at D's Nuts NFTs. Those guys, I do love that whole project. It's great. If you ever have a bad day, go to their Discord group. You'll laugh your head off all day long. And yeah, I'm glad these guys are doing pretty good for utility type of thing. Really looking forward to that casino. All right. And let's see. So that's 2. Why is Solana down? Everything's down. That's just how it is. Just take a look at the last 15 minutes I was talking about. Rob, what do you predict the price of Bitcoin will be in 3 months? Tell you exactly what it is. Here's my prediction for 2022. What's the Bitcoin price today? It is, the Bitcoin price today is 41,642. So here's my prediction for 2022. Bitcoin will be between 41,642 and $100,000 in 2022. There's my prediction. There you go. One of my lessons, predictions. That's 3. This is a good question. Why are bushes bushy? That's a great question. I think it has to do with photosynthesis and the way that bushes grow and thrive, and depends on how much you water them. That's 4. What's your thoughts on Litecoin? I can't believe it actually went up. I can't believe Litecoin went up. I remember when Charlie Lee sold it at the very top, and the guy's like, Charlie was one of the founders of Litecoin, and he sold it right at the perfect time, and he got out. He's the only guy I know that could do that. And I'll never buy Litecoin. I just don't see the whole point of it. Maybe it could be do great, but I doubt it. And that's it. So look, everybody, thanks for stopping by. I appreciate it. If you like today's video, give it a thumbs up. Also consider subscribing. All these we talk about are time sensitive. That's it for today. Just as a quick reminder, for all you Voyager fans, I will have the CEO, Steve Ehrlich, on the show January 31st. I already know the questions to ask him, so you can put that in the comments. Not here, but in the comments over on the regular, not in the live chat, but in the comments, and I'll take a look at those. But I've already got the top 3, and I just need 2 more. So let me know what you want, and that's it. Thanks so much. See you on the next one.